You're listening to Retail Disrupted, a podcast that explores the latest industry developments and the trends that will shape how we shop in the future. I'm your host, Natalie Berg. Retail consultant Graham Soult is joining me on the podcast today. We're going to be discussing Wilko's unexpected return to the high street. We're going to take a closer look at trading updates from fashion retailers Asos and Next. And we're going to explore some of the opportunities and challenges facing high streets in this digital era. Graham, welcome to Retail Disrupted.
Oh, thank you. Good to be here.
Well, it's great to have you here. I know we've known each other for a long time and our paths have crossed over the years as retail commentators. We've done a lot of events together and I always really value your thoughts and views on retail and especially the placemaking side of retail, which is not my area of expertise. So I always kind of look to you for insights in that space. And it's great to have you on the show. Really looking forward to the conversation. I know that you are wearing a few different hats these days. You are a retail consultant.
Yes.
You are a member of the High Streets Task Force.
That's right. And
most recently, you've been appointed chairman of Durham Business Group. So firstly, congratulations. That sounds very exciting.
Yeah, thank you. Well, it's I'm big about networking, and Durham Business Group is one of the biggest network organisations in the Northeast. So it's really nice to be a part of it and to be kind of out there, kind of championing the value of people working together and talking to each other.
Fantastic. No, that sounds really exciting. And more generally, Graham, what's keeping you busy these days in your day job as a retail consultant?
Well, I've got a mix of work really. So as you might well know, I've got some kind of ongoing projects where I work on a regular basis in places like Durham and Chesterley Street. So I'm basically recruited there to work 2 or 3 days a month, working with retailers and other businesses, and being there as a source of support and encouragement and a bridge sometimes between occupiers and landlords, and just playing a part in helping to support and promote and curate the place. And then alongside that, I have various kind of like one-off projects. So I was recently working down in Wiltshire in Malmesbury. I've been doing some work in Spalding in Lincolnshire. So it's always a real pleasure to be able to meet different people in different places and just to experience different towns and different businesses and to constantly be inspired by all that.
Fantastic. And it does feel like physical retail is very much alive and kicking. And we're going to come on to that throughout the conversation. But if we could kick off with, I guess, let's just get the negative stuff out of the way, right? I'm not going to say, I promise I won't say death of the high street. I know you hate that phrase. And I do too, because it's evolving, right? It's not dying, it's evolving.
Yeah. Exactly.
Okay. But let's address the kind of the doom and gloom. So we know we're in this period of profound structural change. And again, that's the phrase that I feel like I've been saying for the past decade, but for good reason, right? Because there has been so much disruption. We've seen the rise of e-commerce and digital. We've had COVID, which, as we all know, totally upended shopping habits. We've had the worst cost of living crisis in a generation. And now we have ongoing geopolitical instability in various parts of the world. And all of these things have directly impacted retail in some shape or form. But I think high streets have been struggling for a long time, right? And stores are still closing. Big brands are still going bankrupt. In light of all this disruption, what, in your view, are the biggest challenges facing the high street today?
Well, I think it's a good summary there of all the challenges that have been thrown at businesses and places. And actually, I always argue that given all that is being thrown at businesses, it's remarkable that in almost every place that I go to, there are businesses that are telling me, Graham, we're having our best year, or businesses opening and expanding, and there's lots of really positive stories, and that's why I spend so much of my time really banging away on Twitter and LinkedIn and elsewhere, trying to amplify some of these positive stories, because there is a danger that amid all the doom, stores and and businesses that are doing actually really well and demonstrating incredible resilience and creativity get overlooked. So I'm really passionate, as you know, about kind of making sure that we don't forget that side of things. But for sure, there are all kinds of things happening at the moment that if they weren't happening, it would make life an awful lot easier for everybody. And one of the things that everybody in my shoes always mentions, of course, is business rates. And and I know from my work in Durham and elsewhere that it absolutely is one of the biggest hurdles that is preventing, particularly retailers, from either staying in their existing stores or expanding into new premises or even starting out in the first place. And so it's certainly something that I think everyone accepts needs to be sorted out. No one really has any answers for how to sort it out other than to keep pushing it into the future. But I think we've seen already that in the revaluation that took place in April, quite a lot of properties in the places that I work did end up paying lower business rates as a result of that, which is good. But I think ultimately some form of tax that isn't about paying based on the value of where you're trading from, but is based on how much you're selling, has to be the way forward.
Yeah, absolutely. I mean, that's been one of the perennial challenges for retailers trading on the high street, and I guess it's even more. It's sort of been exacerbated by the inflationary environment that we find ourselves in, and yes, cost pressures are beginning to ease. In fact, there was a report that just came out from EY. They released a quarterly profit warnings report, and there's some positive news there. They showed that, and I'm going to come back to business rates in a sec, but I just want to briefly highlight this because this is a little bit of good news. The EY report showed that in the third quarter, UK listed retailers issued 5 profit warnings, which is a decrease of 55% compared to the same period last year. So I think that is a sign that things are slowly starting to improve from a kind of macroeconomic perspective. But just going back to business rates, it could potentially get worse before it maybe eventually does get better, because there are reports that business rates could rise by nearly £2 billion next year, because of course that rate is linked to inflation. And now a number of retailers like Tesco, M&S, IKEA, they're now calling on the government to scrap the increase in next month's autumn budget. And then we have the BRC, the big retail trade body, warning that without government action, it'll ultimately be the consumers that foot the bill in the form of higher prices. So I'm curious to get your views on this, Graham. Do you think that a huge rates bill could be the final nail in the coffin for some retailers?
Well, I think certainly ultimately all of us are paying for business rates in the products that we buy. So in a sense, if you replace the business rates with something else, it will still fall on the consumer anyway, ultimately. But I think in terms of the upcoming increase that is being expected, I guess my heart kind of sank when I saw the boss of UK Hospitality using that another nail in the coffin phrase, because I know these trade bodies have their own agendas, and sometimes they do use quite bold and fiery language to make their point and to have their influence. But honestly, I really wish sometimes they would do a bit more of flagging up the good stuff that's happening. Because actually, if I was the boss of UK Hospitality, I wouldn't be using that nail in the coffin phrase. It's a phrase that I refuse to use. I never use it. I never will use it because I think it's really unhelpful. I would be saying, actually, a look at how good hospitality and retail is doing, given all that's happening. I'd be praising the ingenuity and creativity and the resilience of these businesses, and saying, we can be really proud of what these businesses are achieving, but actually, if we have this business rates increase happening now, it's going to be deeply unhelpful and is going to have an impact on how far businesses can keep doing what they're doing. I would frame it that way, because I think I think in the media there is so much of this ridiculous apocalyptic language. We don't need the trade bodies adding to it themselves.
Yeah, bad news sells, Graham.
Well, also good news can sell. If
Good
I
news
think,
can sell, for sure.
yeah, exactly.
And we are definitely going to come on to some good news, Graham, I promise. But before we do that, I do want to ask you about store closures. We are still in 2023 seeing store closure announcements from major high street retailers, M&S, Boots, Argos, Clark's, New Look. There's still a lot of activity in this space. And I think, if we were talking about this maybe 5 years ago, we'd all be saying that, look, it's an uncomfortable truth that there is too much physical space to reflect demand because we're shopping more and more online, right? And it's just a balancing act and redressing the balance, if you will. And what we have seen over the past sort of 5-10 years is a right sizing of store portfolios to acknowledge this, to acknowledge that we're living in this digital era and we don't need as much physical space, and the physical space left remaining really has to be repurposed and worth our while. But my question to you is, considering that we are still seeing some fairly significant store closure announcements from these big brands, my question to you is, do you think that the industry has now recalibrated, or is there perhaps some more right sizing to do?
Yeah, it's a good question. I think we're probably getting more to where we need to be, in that if you think about it, COVID was like the big shake-up, and it got rid of a lot of the retailers who were kind of hanging around not very healthily anyway. And so actually, apart from Wilko, which I'm sure you'll come on to in a minute, there hasn't actually been all that many in the way of big retail collapses since COVID, which is good in a way, as I think it demonstrates how a lot of the retailers who are still around are getting it right in many ways. But you're right to flag M&S and Boots and others. And again, I think in a sense you have to kind of unpick some of these individual retail histories and not just assume that it's all because of the high street having problems. So obviously, Boots, for example, it took over Alliance Pharmacy, I think it was, and it ended up with all kinds of duplicate locations. Boots closing stores now, it's getting rid of some of those overlapping locations that are the result of its acquisition in the past. Similarly, arguably with Marks and Spencer's, you can say, well, actually, it's got this big estate that it hasn't really invested in for a long time. So if it was any other retailer, if it was Next, if it was John Lewis, it would probably have got rid of quite a lot of these sites before. So I know it's very difficult when any place loses these kind of iconic names and it becomes a story in the press. But I think you do have to try and understand what the context of it is and the history behind it, and also to offset that with all the good stuff. And I'm always banging on about all the independents that are opening, and that is a trend that we're seeing a lot of. Obviously, they can't fill all these big units, but in terms of the interest and appeal of lots of retail destinations, independents for the most part are the ones who are coming in and making places attractive and interesting and somewhere that people want to go to.
That's a really interesting point. And I think you touched on Wilko, which is a really nice segue, because I do want to talk about what went wrong at Wilko. But also, again, as I can sense that you're really itching to talk about some good news, why Wilko and how Wilko is making a high street comeback. But before we do that, let's briefly introduce Wilko, because I know we have a lot of international listeners. So a quick introduction and a recap as to what actually happened. Wilko is a value retailer based here in the UK. They sell everyday essentials. It's all non-food. So home goods, stationery, pet care, cleaning products, gardening, all sorts of kind of weird and wonderful things. Small selection of pick and mix. It's a kind of strange but very useful selection of stuff. And for those of you based in the US, I mean, I think the closest comparison, it's not really a fair comparison, but the closest comparison is that it's kind of like a small and very unflashy version of Target, a very low budget version of Target. But it is a much loved brand. It has been around for nearly 100 years. It had around 400 stores across the UK. It went bust recently because it failed to secure a buyer for the entire business. So unfortunately, all the stores were closed. Nearly 12,500 jobs were lost. And it felt like a real blow to the high street. Now, the owner of another value retailer, one of their competitors called The Range, their owner, CDS Superstores, bought the intellectual property and website, and a number of the physical locations were sold to competitors B&M and Poundland. So that's where we were. But just a few weeks after all of this drama unfolding, CDS Superstores, so the new owner of Wilko, they've announced that Wilko will be making a return to the high street. So they're going to open 5 stores before Christmas, and they're saying that in the next 2 years, there will be more than 100 Wilko stores open across the UK. So it's a really unusual story with lots of twists and turns and a largely positive outcome, I'd say. Lots of drama. But overall, I think it's great to see a brand with as much heritage as Wilko's being preserved. You know, that's something that doesn't happen very often. Now, we're going to come on to the reopening and what this means for retail, Graham. But first, I want to ask a very simple question, which is, what went wrong in the first place?
Yeah, well, I think in the UK we have a lot of value retailers of a Wilko kind of ilk. We've got B&M, we've got Home Bargains, we've got Pound Stretcher. There's loads of them, all filling that space that used to be filled by Woolworths, of course, back in the back for 100 years, over the last century or so, until Woolworths itself went bust in 2008. But I think Wilko's issues were basically it ran out of money. If you went into Wilko at any point over the last 3 years or so, during and since COVID, you were greeted with empty shelves. And so its whole purpose was to be the place that you could go to if you wanted some deodorant or grass seed or pet food or sunflower hearts or whatever it might be.
I always get our bird food from Wilko. Always used to, I should say.
You'd go in there and it would always have those things.
Yeah.
And as soon as their supply chains got screwed up, and you would go in and there were gaps on the shelves, and all kinds of issues supposedly around suppliers not wanting to supply anymore, and the cash flow and the rest of it. You know, that was the real kind of issue, I think, in that you started to go to B&M for your bird food, or to Pound Stretcher, or to Home Bargains, and people got out of the habit, I think, of going to Wilko, even though they loved it, because you can only love a retailer so much if they can't actually sell you what you want. And I think that was really the issue. I've got a bit grumpy at times with all these BBC articles arguing that it's to do with Wilko having too many stores on the high street and other retailers moving out to retail parks. And I don't really buy that, because I think the whole point of Wilko was its convenience, and the fact that a lot of people a lot of people on low incomes, actually, who maybe don't have cars, who would use the bus, who would walk, you know, they found Wilko stores really important and really convenient on the high street. But also as we'll come on to, the fact that so many other retailers are picking up these high street sites, I think is an indication that actually those locations aren't so awful after all. So I don't think it was the locations of Wilko that were the problem. I think it was really its ability to trade successfully and its ability to give customers what they want in those last few years. Because like the boss of the range has said, for the bulk of Wilko's 90 plus years of history, it was very successful. It was still making profits until only 2 or 3 years ago. So it wasn't really a broken retailer in the way that some of the other ones that have gone bust have been.
Yeah, that's interesting. I mean, at the end of the day, it comes down to getting the basics right and executing well, which,
Yeah.
amongst all this disruption, it can and change in retail. Sometimes I think it can be easy to take your eye off the ball and just focus on, just doing the basics and doing it
Mm.
well. So, okay, so that's a really interesting take on the location side, because I agree. I saw a lot of commentary around the fact that the locations weren't right, but it's a really good point that, well, if others were quick to grab those sites, then obviously there was some value there. So really interesting stuff. So just on the reopening, Graham,
Mm.
I know you closely follow. You are follow the sort of rise and fall of Woolworths, which
Yes.
was, as you mentioned, one of the earliest and possibly the most significant of the retail heavyweights to have disappeared from our high streets.
Mm.
There's been talk on and off over the years of Woolworths returning to the high street, which again, I think is testament to the strength of the brand and the heritage and that loyalty that still exists, oddly enough. And also others that have disappeared, like Gap and BHS, for
Mm.
example, they've resurfaced in various forms, whether that's online or as brands in some of their competitor stores. And I'm curious to get your thoughts, I guess, more generally on this revival of brands that maybe lost their way but still resonate with shoppers.
Mm.
And then specifically for Wilco, curious to kind of get your views on how things might change with these new stores, because I can imagine that the new owners won't want to repeat the same mistake. So just curious to get your views on what the stores might look like under new ownership.
Okay. So on the first point about kind of defunct brands coming back, it does happen a lot. So after Woolworth went bust, it was bought by Very and came back as an online brand, but it didn't last very long because I think it missed the point really. And and so when you're kind of reinventing an old brand, you have to kind of not lose sight of what the point of it was. And the point of Woolworth was that it was there and it had a particular smell and atmosphere and memories. And if you just kind of bung that online, it 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 didn't work.
It
It
doesn't
missed
translate, does it?
no, it missed the point of what Woolies
Yeah.
was all about. And I think the danger uh, is or was the same with Wilko potentially. Is when it was announced that the range was buying the Wilko brand and relaunching Wilko.com, I was thinking again, well, how's that going to work? Because the whole point of Wilko is that it's just there on the high street. You pop in when you need something. But it began to make more sense at the point where it became clear that the range was going to sell Wilko brand products in its own stores already. So 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 it's worth explaining probably that the range is more of a big shed kind of retailer. So it tends to operate from kind of out of town big box retail locations. It's got about 200 now around the country, and so Wilko products are already being sold in those stores as of last week, I think it was. And so I was thinking, even before the announcement of new Wilko stores, that well, if you're trading Wilko.com online, if you're selling Wilko brand products in the range stores, it's not that big a leap if you're producing the Wilko own brand anyway to then trade a Wilko store. So I wasn't entirely surprised, although I was very pleased when it was announced that the Wilko stores were coming back, and we don't know at this point if the first 5 stores are going to be old locations resurrected or completely new ones. All that I think is still to be revealed. But it's quite interesting, and I think honestly, there's every reason to assume it it will work because if, as I say, one of the biggest problems of Wilko was that um, it couldn't fill the shelves, its supply chains were all screwed up. The range is a big business that is very good at keeping its stores well stocked. So it will be lovely in a sense to go into a Wilko store and see it full again of Wilko own brand products because again it's probably worth emphasizing to your listeners that actually one of Wilko's big strengths relative to other discounters is its own brand products. It was I think they accounted for about half of all the sales, maybe, and
Oh wow, it's higher than I thought.
yeah, and just really strong in areas like pet care and garden birds and health and beauty and stationery and all kinds of things. And if you go online, one of the things that everyone was talking about after Wilko went bust was the poo bag. So if you have a dog and you need the little kind of bags to put the bits in, Wilko did fantastic poo bags, and everyone was lamenting the loss of the poo bag.
Oh wow, I did not know that.
Yeah, I was in the
Maybe
range.
they'll be back.
Well, they already are. I was in the range yesterday in Gateshead, and one of the first things they've brought back is a big display of the poo bags because it's
awesome.
It's not just the brand affection; it's the fact that actually people really valued some of the Wilko own brand products for offering quality at a really good price. So
Yeah, it is those really niche things as well. Because I always get wipes for my glasses, like lens wipes. I always get them from Wilko, like religiously. Yeah. If I'm out of those, I go straight to Wilko, and that is such a niche thing. So yeah, interesting stuff. But yeah, really good, really, really good to see them coming back to the high street. And as you say, if they can just fix the basics, and I think I also read that they are going to be putting some kind of terminal. I think I read it quickly. I think it was like an endless aisle type screen or something in store where they can connect the physical and digital a little bit more too. So interesting to see how that plays out, or whether they really need to go down that route. But yeah, definitely a little bit of a tweaking of the model, fixing the basics, and hopefully they'll be good to go.
Yeah, it's a good way for the range to also get its range seen in different locations. Like I say, it's a big box retailer. It tends not to have much of a presence in town or city centres, and so if it can use those Wilko stores as a way to showcase its wider offering, that can get the range in front of people who maybe haven't been aware of it before as well.
Yeah, absolutely. Great. So I just want to switch gears a little bit now and talk about a couple of other retailers that reported results this week. And I think it's been a week of mixed fortunes because we had Asos, the pure play fashion retailer, reporting, and we also had Next, also a fashion retailer, but of course has a very strong presence on the high street as well as online. In fact, a stat that I love about Next is that I think they were the only or one of the only high street retailers to have gone into the pandemic with over half of their sales already online. So an interesting little stat to show just, they were obviously an early adapter in that space. But yeah, so just to briefly recap on what we saw this week. So Asos, not great news at Asos. They said this week that their full year sales are expected to be down by up to 15%. They announced, because the results were delayed, they announced just yesterday that last year they reported an annual loss of nearly £300 million. They're now exploring a potential sale of the Topshop brand, which, as you might remember, they bought during the pandemic. Shares have plunged. It's not a great time for Asos. Very briefly, Next, on the other hand, continues to be, retail's golden child. They released their Q3 trading statement yesterday, and it's pretty much all good news despite the really challenging backdrop. Sales were up. Interestingly, online sales were up nearly 7%, while store sales were actually slightly negative. So interesting to see that kind of mix. Probably weather related, I would assume, had some really strange weather in this past few months, which I know has kind of wreaked havoc with fashion retail more generally. But
Mm.
so yeah, worth calling that out. But Next raised their profit outlook for the fourth time in 6 months, and they just continue to get it right. You know, they've been one of the more resilient retailers out there, but they just continue to, again, talking about the basics, they just continue to execute well and just get it right. And so, Graham, I'm interested to get your views on these results. What do they tell us about the state of retail? And are these results perhaps a reflection of what's happening across the wider industry?
Yeah, because I think if you look at the overall trends in the headlines of late, it's as somebody who champions the high street, it's actually quite nice. It makes a change that a lot of the negative headlines are about the pure play online retailers, and we've seen that with Asos. We've seen others like Boohoo and Zalando and Very and all kinds of pure plays who are finding it hard going at the moment. And I think in some cases it's worth saying with Asos, maybe its purchase of Topshop is another of those brands that doesn't translate into a pure play online environment because it was such a stalwart of bricks and mortar. People used to like going there and trying things on, and the vibe of the stores and all the rest of it. So I think maybe in taking it purely online, it missed a trick, and it might be that in the future, if it sells Topshop, it could make a reappearance perhaps under someone else's ownership. But I think a lot of these issues that the pure players are facing now do go back to COVID and that time when if we wanted to buy any new clothes, we had to buy online. And I think a lot of them made the mistake of thinking that the trend that was happening was going to keep happening forever. And what
Mm.
has happened instead is that actually where we are now is probably where we would have been if COVID hadn't happened in terms of online market share. But the issue is that these online retailers have invested in more capacity and more warehousing and more whatever else, and now they're thinking, oh blimey, what do we do with all this excess space we don't need anymore? And so I think they haven't really planned for what might happen, and that's why they're facing these challenges now. But ASOS is a funny one. As one of the things that I was reading in their results is how they've got their new strategy of going back to fashion. And when a retailer comes out with nonsense like that, it's like, you're a fashion retailer. If your strategy is going back to fashion, what on earth are you talking about,
That
honestly?
that stuck out for me as well. I have to
Yeah,
admit, it was a
it,
strange phrase.
it's really concerning when you see that kind of thing, and you think, hasn't anyone looked at that and thought how ridiculous it looks? Um,
But don't you
um,
think ASOS is having a little bit of an identity crisis more generally? Because I just think, I mean, when I give talks around, the future of retail and just get it, as we've mentioned a lot during this conversation, you're just getting the basics right. I mean, at
mm,
the end of the day, you have to do two things. You have to differentiate from your
yeah,
rivals, right? You have to offer something, and you have to have a USP, be really clear about that proposition, and do it really well. And of course, with ASOS, they have new disruptive brands that are coming in and giving them a run for their money. Everyone from Shein and Temu to the more traditional disruptors from Boohoo and etc. So you've got to differentiate, and I think ASOS is struggling there. But also, um, you've got to stay relevant. I mean, that sounds really obvious, right? But you have to stay relevant, and I think ASOS 10, 15 years ago was very relevant because
mm,
fashion retailers didn't really do e-commerce very well. But now fashion retailers have really gotten to grips with selling. I mean, there's a long way to go, don't get me wrong, but they've come a long way in that space. And at the same time, we've seen the rise of TikTok and Instagram as
mm.
places where shoppers will discover new brands, and increasingly where they'll couple of clicks buy products. So that's becoming sort of the new place to be, and it's just not relevant to go search on ASOS and find hundreds of thousands even of little black dresses. It's just not really the way that people are shopping these days. So I just wonder if there's a bit more of an existential crisis facing ASOS and how that might play out in the future. But yeah, interesting times for retail. But next, on the other hand, again, nice to see a traditional retailer, a retailer that has a presence both on the high street and online, continuing to get things right and perhaps serving as an inspiration for those retailers that are struggling to do it in these challenging times, to do things well in these challenging times.
Yeah, I agree.
Uh,
I think Next is doing well because it gets all the elements of of its its presence right. It's really good online. It's really good at the buying process and the returns process, but also its stores always look well invested in. They always look smart and tidy, and it doesn't take its eye off the ball. So I think it's to Next it's to Next credit that it keeps doing well, and it deserves to, because it gets the basics right. It keeps evolving its offer to please customers, and if you keep doing that, you're on the right track, really.
Yeah, yeah, absolutely. And a lot of that, I think, is a reflection of their leadership. And, there's been consistency in leadership and execution for a long period of time. So
Absolutely.
to
Yeah.
their credit, to Lord Wolfson's credit. So, Graham, I'm conscious of time. I want to switch gears quickly and talk about some of the documentaries that you've been working on.
Oh, yes.
So you've been on
Mm.
TV a ton recently. You've been on Channel
Yeah.
5 talking about Greg's, talking about Tesco. And just last night, a documentary on Lidl aired called Lidl, Behind the Scenes 24/7. Can you talk us through some of the insights from your interviews? And I guess the key theme here, based on the documentaries that you've contributed to, is around food retail. So curious to get your views on, I haven't had a chance to watch the little one yet, but that's very much something I'll be doing on repeat. So curious to get your views on some of the big trends impacting food retail these days, because there's been a lot of disruption in that space as well, both online and in store.
Yes. Well, it's always nice to be involved in these things, and to be appearing on TV. It's good fun and good practice, and a fun thing to do. In terms of Lidl, and Tesco, I suppose, I tend to come in and quite often give a bit of a historical perspective on these things, as usually how it works is they bring in a whole load of different talking heads, all with different expertise, and so you've got others there who are more clued up on the consumer side of things and the psychology, and my input is quite often about placing what's happening now in some kind of context. And so in terms of Lidl, it was really making the point that it hasn't always been the success story that it is now. It's easy to forget quite how hard it was for Lidl and the other hard discounters to make those inroads in the early days. And I think it's a combination of just hammering away at their kind of brand presence, but also tweaking the offer to make sure that it's more relevant to it, that it's more relevant to a UK consumer. So I made the point, for example, that although Lidl is part of a German company, it's actually one of the biggest investors in UK suppliers, for example. So and both Lidl and Audi are really strong these days at pushing their credentials as investors in local producers and UK supply chains, and that's really important. But also, I think again, a theme that came out of the programme is that Lidl has really improved the quality of its offer, and some of the own brands that it comes out with under all these kind of weird and wonderful names are actually really good. And you go there not because it's necessarily always the cheapest, but because actually sometimes you can get really good products at Lidl that you can't get anywhere else. And so I think it's a combination of all these factors, which is why Lidl and Audi are nibbling away at the market share of the big players now.
Yeah, yeah. I know it is interesting. I did something similar for Channel 5 a few years ago about Aldi. So
Mm,
we should compare notes.
yeah.
But no, it is interesting. And there's just so much general interest, isn't there, in how the discounters keep prices low and sort of the inner workings of the likes of Aldi and Lidl. And I think it's especially relevant now in the face of um food price inflation being what it is obviously beginning to ease, but it's still, I think, a challenging time out there for food retailers and consumers looking to get as much value as they can from their weekly shop. So interesting stuff. Now, Graham, we've covered so much ground. I really appreciate you taking the time and being here. We could go on for hours, I'm sure, but just one final question. And I'd like to do a little bit of future gazing, which I'm sure is something you do regularly as a member of the High Streets task force. I'm curious to get your views on how the High Street might change. If we look ahead to, say, 2030, 2033, how should we be reimagining these spaces? And who are the key stakeholders in making this happen?
Okay. I think we're already starting to see how the high street is changing, how it's evolving, and certainly a lot of places that I go to, it's becoming quite a lot less about shopping and quite a lot more about other things. So, for example, in Durham or Chesley Street or the places that I work, there's quite a lot of growth in hospitality. So you're seeing more places to eat and drink. But not just that, you're also seeing more diverse uses. So you're seeing a lot more kind of housing coming in behind and above shops, gyms, hotels, all kinds of community uses as well. And so I always make the point that in a sense, you're going back to how things were maybe a century or more ago, because it wasn't always the case that high streets were homogenous retail. Back in the late 1800s, there used to be a lot more diverse in terms of the functions that you would see in a town or city centre. So we're going back to that in a different way, of course, but it's recalling that kind of heritage. And also, I've made the point before about more and more of what we're seeing in the centre of our towns and cities is independent as well. So it's not the same stuff that you get everywhere. And for a long time, people had complained about this whole clone town thing, how you go to town or city, and it would be the same brands. You'd have, always Debenhams and Topshop and all the same things everywhere. And actually, it's no bad thing in some ways that now, if you go to Durham or you go to Chesley Street or you go to Spalding or wherever else it is, all these places have an offer now, I think, that is much more distinctive and much more interesting, arguably, than it was in the past. So I think that there's a lot of positive things happening. Their challenge, I suppose, or my challenge in Durham in particular, is how do we get and how do we keep more retail as well, because you need the right balance, and ultimately it doesn't matter how much people are shopping online or at the retail parks, they still tell you, oh, we want more on the high street. And you say, well, hang on, you're the ones who are shopping at Amazon. So it's partly about reminding them of the consequence of their own actions, but also seeing how we can make it easier for businesses to open and succeed on the high street, because retail isn't dead. It's still going to be a big part of the high street into the future, even if it takes a different form to how it has in the past.
Fantastic. Graham, thank you so much for joining me on the podcast and sharing your insights. And to our listeners, if you want to learn more about Graham, you can visit his site, cannyinsights.com. I will post links in the show notes. And if you missed last night's Channel 5 documentary on Lidl, then you can watch it on repeat on the My5 app. That's all for today. Thank you for listening to Retail Disrupted. If you enjoyed this episode and would like to support the podcast, please leave a rating or review or share it with others. It really makes a difference.